So today we saw another red day for Tesla stock. Now, if we take a look at Tesla stock from an intraday time frame, we see that Tesla stock actually closed down slightly lower than the close from yesterday. Now, before I go ahead and cover more about Tesla, I want to highlight this trade idea I called out in the Push and Profit private group, where in the morning I said, hey, I'm looking into trading AMD stock as there's a lot of bearish activity in the options flow. And I mentioned how I'm looking to get 111 puts after the price hits greater than $111.65. Now, long and behold, once AMD hit our price level, it initiated our entry and it pretty much sold off, making it an excellent trade, where if you would have traded the option contracts that I called out, you would have been up over 100%. And if you were just trading the underlying shares, I believe it was close to a 2% gain. And so with that said, if you guys are interested in getting my daily trade ideas, where every single day I call out stocks I'm looking to trade and the reasoning behind it, as well as getting my overall outlook on the overall stock market, make sure to check out the first link in the description below. There is a coupon code for you guys to join the Push and Profit private group. But with that said, like I said, I want to go ahead and cover a little bit more when it comes to Tesla. Now, there was recently someone who went on CNBC and provided his outlook on the overall market, and I want to share it with you guys because it's pretty much in sync with what I told the Push and Profit private group just a few days prior.
Next guest was one of the first strategists to call for a rally back at the beginning of the year. Now it says we may have seen the peak with the S&P flatlining around 4,400, although we're obviously above that now in the second half of the year. Joining us here at Post 9 is Stifel's chief equity strategist, Barry Bannister. Barry, great to have you on set.
Great to be here.
Great to see you. I keep thinking you were zigging when others were zagging. Are you now trying to do the same?
Well, the second quarter really was led by the big tech, but we think the third quarter is going to be led by more what you call cyclical value. And this would be the banks, diversified financials, industrials, basic materials. They should give you a nice outperformance pop in the third quarter as the economy holds on.
So why not more aggressive targets then going into year end?
Well, I think that by the end of the year, our model is showing that unemployment's going to perk up. It's going to go up. And the Fed is going to hold on to a high rate longer than people expect. They have to ensure that inflation is down. They actually have to overshoot to the downside. And so if the Fed holds on, real rates go up, price earnings multiples come down, I think we get back a few percent in the fourth quarter.
Now, this really aligns with what I've recently told the Push and Profit private group of how we're having a bit of a sector rotation, where we're seeing a lot of outflow going from the tech side of the market going into the value side of things. But with that said, I want to go ahead and hop into my laptop and talk a little bit more about Tesla, both from the perspective of a long-term investor, but also from the perspective of a short-term trader. Alrighty, so we are now officially in my laptop and we're taking a look at Tesla stock from a daily time frame. As I mentioned previously in the beginning of this video, we had another red day for Tesla. However, as I also mentioned in the beginning of this video, if we parse through deeply on the charts, we see that Tesla didn't close relatively too far off from the close of yesterday, so it wasn't too bad. But in yesterday's video, I kind of broke down my overarching view on Tesla, both in the short term and the long term. However, I want to go ahead and kind of just elaborate on that right now. I know oftentimes when I talk about Tesla stock going down in the short term, a lot of individuals that watch this channel get frustrated. They don't like when I talk about Tesla stock going down. However, we can't be agnostic to the fact that stocks don't forever go up, right? And so I'm still very bullish on Tesla in the long term. However, in the short term, I'm very bearish on Tesla, at least for the short term, and I'm going to go ahead and explain what levels I'm looking at and the reasoning behind it. But, in yesterday's video, one of the comments, someone mentioned that, it's very unlikely for Tesla to hit this level that I mentioned. And I want to go ahead and break down how it's very likely that it can hit that level. However, I also want to go ahead and provide a disclosure, just kind of breaking down that when it comes to trading and investing, I don't primarily focus on technical analysis and looking at the charts, because stocks don't adhere to the squiggly lines that, you draw on the charts. I think technical analysis is, a decent data point, but it really is just one data point, and it's not the strongest one out there. However, we're here on the chart and we're looking at Tesla stock, right? So why are we looking at Tesla stock on the chart right now? Well, as I said in previous videos, Tesla is a stock that's held by a majority of retail. In fact, if we take a look into the institutional ownership for Tesla, I'm not going to show it in this video because I've showed it so many times, but the institutional ownership for Tesla is around 44%, which is significantly lower to a lot of the other mega caps out there. For example, if you take a look at Microsoft, just Google Microsoft institutional ownership, you'll see that Microsoft is owned 70% by institutional owners like hedge funds and other, big financial, funds, right? A lot of banks, institutions, etc., right? However, for Tesla, it's a different story. It's held majority by retail who either invest long-term in Tesla or trade in Tesla. But nonetheless, Tesla's held mainly by retail. Now, what does retail typically look at when it comes to trading? Mainly technical analysis. Technical analysis is one of the easiest data points to kind of parse through. I would say that fundamental analysis is one of the hardest ones. And although I know how to do fundamental analysis and look through it, we have to understand that not everyone in the retail sector understands how to do that. And so that's why I put an emphasis on Tesla for technical analysis, because that's what retail is looking at. In fact, that's why I mentioned we had this descending trend line where it got rejected so many times, and we're having this hard rejection right over here, right? Now, does that mean that Tesla can never break above this level? Absolutely not. But it's very likely that we're going to continue getting rejected, and I want to go ahead and cover a few reasons why, right? Now, I told the Push and Profit private group a couple of days ago that we're seeing a big sector rotation, right? We've seen a lot of the mega tech stocks that have rallied up recently, right? They're kind of getting sold off now. Now, if we take a look into, let's look at the QQQ, which is NASDAQ Index ETF, we see that pretty much in 2022, after we started having the rate hikes, we saw a severe decline in the overall NASDAQ Index ETF. However, things shifted as we went into 2023. We had a lot of AI plays, and a lot of focus was into tech. Actually, tech was one of the most overcrowded trades by institutions. But now we're seeing institutions kind of pull away from tech stocks and kind of going into other, areas of value, such as the finance sector, right? We're seeing, look at Bank of America. I'm sure if I typed in JP Morgan, we would see something similar, right? We're seeing another rally in a different sector, and that's completely normal, right? In the stock market, we oftentimes see sector rotations, right? Now, in yesterday's video, I highlighted the fact that, Tesla stock, I could see it coming down to this level right over here at $190 per share. And the reason why I said right over here is where I want to go ahead and pay attention to it is because there's a lot of volume by price. Now, when there's a lot of volume by price, that means that there's a lot of activity between the bid and the ask. There's a lot of buying and selling, and that's where we typically see consolidation. That's where we see supports and resistances form. For example, in the past, where we have a lot of volume by price, we see that it was a support for Tesla, right? Previously, most recently, we see that it was a resistance. And we see that when there's a lot of volume by price in the volume profile, that's where things move sideways, right? If we kind of zoom out, look at the biggest area where there's a lot of volume by price. That's where we saw the most, consolidation with Tesla. But when there's little volume by price, that's where we see the biggest movements, because if there's buying pressure and there's little volume by price, well, that's going to push the stock up into order books, right? And if it's vice versa and there's little volume by price and there's a lot of selling pressure, well, it's going to push down the order books, right? And so I mentioned that, hey, I want to go ahead and watch Tesla stock and see what happens if it touches this level around, the $190 price level. Now, is it guaranteed that Tesla is going to hit this? Absolutely not. You guys have to understand that I don't have a crystal ball, but this is just something that I'm watching. Now, in the comment section, as I mentioned, someone mentioned yesterday in the video previously before this one that it's unlikely for Tesla stock to hit this level. But I do want to remind us that, if we kind of just look at Tesla from the beginning of the year, it rallied up almost 80%. And then towards this area, if we kind of go from the peak of it all the way to the bottom, we see that it fell down 30%. So it's not likely for Tesla to kind of have these pullbacks where it kind of pulls back 30%. So, we kind of rallied up another 85%. And, patterns don't necessarily have to repeat themselves, but they oftentimes do. And so we could potentially see Tesla stock fall another 30%. Now, it wouldn't be the end of the world, right? And I want to go ahead and talk about what is my approach from a long-term investor and a short-term trader, starting with the approach of a long-term investor. So if you guys have been following this channel, you guys know that long-term I'm bullish on Tesla, and it's mainly because of the fundamentals, and I do believe that Tesla stock is ahead of the curve in the EV space. Now I know Wall Street, when they look at the fundamentals, they can't put a valuation on robo-taxis, right? They can't put a valuation on the robotic sector of Tesla just yet. Right, they're looking at things from a myopic perspective, quarter over quarter. And one of the major issues with Tesla in its recent earnings was the bad forward guidance from Elon, right? And then as well as the compression and gross margin profits. Now that's something that we were aware of. From here to here, I talked about, hey, we're going to see Tesla most likely beat on earnings, but we want to pay attention to gross margin profits. I gave a bull case and a bear case. I said, hey, if Tesla doesn't compress too hard on gross margin profits, we could see Tesla stock rally up and get closer to the mid 300s. However, we have to have, another approach for if the opposite happens. We can't just be a perma bull and believe that Tesla's always going to go up. We have to, paint scenarios in which the opposite could happen. And so what ended up happening? Well, we did see Wall Street not really pleased or satisfied with the, compression in gross margin profits, and we see a lot of selling going on with Tesla, right? And so, from a perspective of someone who does have exposure to Tesla in my long-term portfolio, I do want to disclose that in my long-term portfolio, I mainly invest in index funds that also have exposure to Tesla, but I do invest in some individual stocks, with one of them being Tesla, right? Tesla is one of the few individual stocks I hold in my long-term portfolio. And I'm not going to go ahead and explain why I prefer just investing in index funds. There's a great book out there called A Random Walk on Wall Street. You guys could check it out in the link in the description of this video. It's one of the books I recommend you read. And it does a great job at explaining why most of the time people are just better off investing in index funds. But with that said, there is, some individual stocks that I do also invest in along with index funds, with one of them being Tesla. And for Tesla falling down right now, this is not too much of a concern, especially because we've seen Tesla rally so much. So what I'm going to be paying attention to is how far is Tesla going to be coming down? I don't have a crystal ball, but if it does continue coming down, I want to see what it does around this area over here, because if it does hit this area and then bounce above it and reject that area, well, that's just going to show confirmation of an uptrend, and that's going to give me a signal to add more to my long-term position in Tesla, right? It's going to give me a signal that, hey, we want to go ahead and add more shares of Tesla. I think a lot of people, when it comes to investing, see it from a completely different approach where they think you should buy in as the stock is rallying. I think Warren Buffett himself one time said that, when individuals go to the grocery store and they see discounts, they're ready to give their dollars in and buy more because obviously things are on sale. But we don't have that approach, when it comes to stocks, and we should have that approach, right? Tesla's falling down. Oh, okay, well, it's not too bad, right? I'm going to go ahead and continue monitoring what they're doing in their space and what's going on with their fundamentals, and obviously keep an eye on the macroeconomic conditions. But if we, again, see that area where Tesla gets, bounces up and shows confirmation of an uptrend, well, that's just telling me, hey, it's time to buy Tesla on sale, right? And that's what I'm going to be doing, simply dollar cost averaging into Tesla and also possibly some other index funds, right? But now, as far as someone who's trading Tesla in the short term, in previous videos, I mentioned how even if Tesla falls down in the short term, I don't want to short it. For example, I'm going to go ahead and zoom in over here. At this gap was when we had the delivery numbers for Tesla where it pushed up. And I mentioned that around over here, it was the day before we started selling off, I mentioned it's very likely that Tesla was going to fill this gap. But even though I knew it was most likely that Tesla was going to fill this gap, I mentioned in a previous video that I still didn't want to short Tesla because they had a lot of catalyst events that were most likely close to getting unfolded, like the Cybertruck and some other legacy automakers joining the supercharging network, and how Tesla's one of the most shorted mega caps out there. And even though Tesla's most likely going to fill this gap, I still wouldn't want to short it because it could bounce up tremendously fairly quickly. Now, what did we see after we saw Tesla fill this gap? Pretty much just went straight up once again, right? And so that's why in the past I was a little iffy on shorting Tesla, even from a short-term trading account. But now things are a bit different right over here. Why are things different? Well, we already heard the update of the announcement for the first Cybertruck being produced. We already had a bunch of the other legacy automakers announce that they're joining the supercharging network. And in reality, we've seen the fundamentals for Tesla in its recent earnings that, the supercharging network, when you actually look at the other services as far as revenue for Tesla, it doesn't make up a huge portion. We do see that Tesla's growing in revenue in other areas of its business, but it's not a significant amount. Now, I do believe that going into 2025, it's obviously going to grow. But what I'm trying to say is that even if we have more catalyst events, I don't think they're going to be strong catalysts that are going to uphold Tesla and push it back to going to all-time highs again, right? And so in the short term, I will be most likely shorting Tesla if we continue having strong days down. Now, I want people to understand that even if I'm shorting Tesla on my short-term trading account, that doesn't mean that I'm still not bullish on Tesla in my long-term investing account, right? That I'm simply just hedging. As Tesla's falling down, right, that means it's obviously falling down in my long-term portfolio. So what do I do? Well, in my short-term trading account, I'm going to be shorting if that ends up happening to hedge, right? I think too many people think that if you're shorting a company, you're against it and you're against America and you hate American stocks. That's not the case. It's simply hedging. If you look at a lot of the financial institutions, a lot of them hedge pretty much all the time, right? Just to mitigate risk, because you don't want to just have this myopic view of just being a perma bear and a perma bull. You have to understand that the market's very dynamic and it shifts very often. And so, one of the shifts that I mentioned to the Push and Profit Private Group is that we're seeing this shift from tech and this AI boom that we recently had into more of the financial sector. With that said, guys, I don't want to make this video any much longer. I want to keep it short, sweet, and concise. If you guys do disagree in the comment section, you guys are free to do so. But at the end of the day, we're all entitled to our own ideas and opinions of the market. We have to understand that the market's a concept and it's not something that's concrete, and that prices can change for a different variety of factors, right? So with that said, I do want to also provide a quick disclosure that you should only trade and invest in whatever you see value in. You should never copy blindly what someone does. If you guys like what I say and you see value in it, then of course you guys could, do whatever you do. But of course you still have to do your own due diligence before you blindly copy. So hopefully I didn't make this video too long. And with that said, I'll see you guys on this next video right over here. Take care, guys.